Good evening, everyone. First and foremost, I should make apologies for our CEO, James Menzies, who was expected to be here to present tonight, but unfortunately can't due to changing travel commitments. So I'll be talking you through our presentation. So first and foremost, I'd like to introduce you to Coro Energy PLC, an AIM-listed upstream full-cycle oil and gas company. We admitted to trading on AIM in April of this year, following the merger of two Italian portfolios, Saffron Energy and Sound Energy Italy, alongside the change of the board and a £40 million equity fundraise. Our chairman is James Parsons, CEO of Sound Energy. CEO is James Menzies, founder of Salamander Energy and CEO through the life cycle of that company before he sold it to Affair Energy for I think $850 million in 2015. We also have Fiona Macaulay, CEO of Echo Energy, on the board as a non-executive director, Ilham Habibi, an Indonesian national, and Marco Fumagalli is also a non-executive director who represents CIP Merchant Capital, one of our cornerstone investors. First and foremost, we have an Italian portfolio of producing licenses, mostly in the Po Valley region of northern Italy. First half of the year, we produced 203 million standard cubic feet, which is an average daily production of 1.3 million scuffs per day. We have strong Italian gas prices averaging €6 per MCF. And most importantly, this gives us a platform for us to leverage into Southeast Asia, which is our new growth strategy, which we initiated at the beginning of the year, and recently in September announced our first acquisition with the entry to the Bulu PSC. So delivering on our ambitious Southeast growth strategy, we have three ingredients here that we're looking to deploy. One is use our key advantages. We have a board who've got an established network in region. As I mentioned, James Menzies was 10 years of CEO of Salamander. James Parsons and Sound Oil have been involved in Indonesia. And we also have, obviously, Ilham, which is a national in country as well. Our capabilities as a team are well blended between commercial skills and financial skills, which we hope to deploy and show you creative transactions. And we've got the experience of a track record of dealing in Southeast Asia. The Italian portfolio itself provides us with a base that we can leverage. There's quite a few people in Southeast Asia who may have capital, and there's people who may have operating capability, but there's very few people who have both. And that allows us to be distinguished and go in and unlock access to new countries where we see significant yet to find, such as Indonesia, Malaysia, and Thailand. So we're using this platform, which has 20-year operating history in Italy, access to capital, and motivated and access board of directors to unlock latent value in Southeast Asia. Why Southeast Asia? Well, first and foremost, we see growing demand. We've got GDP growth rates of 5% and above, which compare to USA and Euro area, which are 2% or less. We have young growing populations, and what these young growing populations need is energy. So we're underpinned by a strong macro backdrop. We also see supply side restrictions. This chart here shows you gas production versus forecast demand, and by mid-2020s and onwards, we're expecting to see Southeast Asia is facing a deficit. It's anticipated that 200 BCF of new production needs to come online every year to support this future demand for gas. We've also got attractive gas fundamentals here. We're seeing in the Southeast Asian region increased gas prices through the last 10 years, and that compares to USA and Euro area, where we're seeing suppressed prices. So we can move forward and make bold decisions in this region and plan forward underpinned by rising prices and growing populations. What we're showing you here is that our view is backed up by the industry. This is Wood Mackenzie's view on the similar themes we've just spoken about. And as you can see, they also see supply-demand gap, as you can see on the chart on the left here. But most importantly, they've got a chart here on the right that identifies where they anticipate or they expect this shortfall to come from. And that's the area of interest to us. And that area of interest is new gas discoveries, exploration, and uncontracted pipeline, bringing discoveries that have already been made but not yet commercialized online and feeding the pipelines that are hungry for this energy demand. That brings us on to our first transaction in the region. And before I talk to you through this transaction, one thing I must state is this is the first brick of building a portfolio. We have no intention of being a single asset company. And as part of our hub strategy, which we're developing, this shows you our first initial entry into the region. It was important for us to get this first deal right because as a small cap independent oil and gas company, you have challenges to face. And so therefore we needed an asset that was within our resource, had significant upside for us to be able to achieve, we understood the risks, and also the commercial scale of the opportunity was suitable to a company of our size and nature. So we've made our maiden acquisition in Asia. We achieved 152 of BCF resource as a result of this. We believe we've got exceptional deal terms and financial metrics, which I'll come on to talk to you about shortly. It's a fully funded acquisition out of our existing cash resource. We spent $12 million in total. 4 of that will be in stock, 2 issued initially, $1 million of stock then issued, subject to the signature of a gas sales agreement, and then another $1 million of stock after 6 months of commercial production, and $8 million, which is $6.9 million in consideration, and just over $1 million in working capital adjustments is paid out as well. This transaction is massively transformational to Coro, both in terms of our physical and financial scale. We've added 152 BCF of net resource, which is up nearly five times on what we had prior to this transaction. Our forecast production has increased from 4 million scf per day to 30 to 35 million. And as a result of that, the EBITDA potential of this company has changed from $5 million per annum to somewhere in the region of $35 to $45 million per annum. So massively transformational, both in terms of size of the resource, as well as financial capability for this company. The transaction itself is slightly complicated, and we don't make no apologies for that, because where there's these opportunities to untangle commercial complexity, we can actually derive quite a lot of value. As long as the rocks underneath it are sound, these matters can be dealt with. So to talk you through the nature of this transaction. So this was originally a deal that was struck in 2016 between Singaporean company, Hyol, a private Singaporean company who was the purchaser, and AWE, an Australian company which has recently been acquired by Mitsui, who was the vendor. This transaction was struck in 2016 at a headline figure of $20 million. We've been able to restructure it, as I said, at $12 million. And obviously bear in mind, the oil environment in 2016 was $50 a barrel. Now we're at 75. So we think we've done good in terms of the commercial negotiation on the entry price. As part of this transaction, Hyol will be paid the stock, and we're paying the Hyol stock to reverse them out of the PSC. So their name comes off the PSC. AWE are the title holder, so we're paying them the cash consideration. And all in all, therefore, the net result is, subject to government approval, will be a 42.5% interest in the Bulu PSC, which contains the Lengo gas discovery. The Lengo gas field is well defined on 3D seismic. It's appraised, cored, and tested. As you can see from the seismic on the right, it lights up, there's a flat spot, there's bright, so we're very confident as to where the gas resource is. It's independently certified by Netherlands and Sewell. The operator actually books these as reserves because they signed an MOU on the gas sales agreement, but we're treating this more cautiously and we're booking it as reserve, as resource. But we have a net recoverable in place 2C of 359 BCF, and we have upside case on the 3C of 420 BCF. The discovery is located in the shallow waters of East Java. We're circa 60 odd kilometers offshore. Water depth in the region is 60 meters, and the discovery is shallow. It's 700 meters depth and 780 meters to the gas water contact. So we have an 80 meter column of gas. It's a shallow carbonate reservoir. As we previously just touched, it's well defined on 3D seismic. We have 2 wells already drilled here. The discovery well, which was drilled on the flank, and then the appraisal well, which has been drilled on the crest. There's a lot of continuity between the data of both of those in terms of the gas water contact and the reservoir, so we've got continuity of the feature. We have dry gas, so there's no issues with dealing with any liquids, but we do have 12% CO2. Now 12% CO2 in East Java is actually a very low number. East Java is a quite high CO2 area. So albeit in the ordinary case, you'd want to see obviously a lesser CO2 number. Here in East Java, we see no issues with 12% CO2. And typically speaking, what we're noticing in East Java is the deeper the discovery, the more CO2 content is relevant. So as I said, 700 meters here, we're not deep, it's not deep at all. So we have a discovered resource. We have a plan of development which is approved by the Indonesian government. That plan of development will involve 4 deviated wells from an unmanned platform. That will be tied back to shore with the 20-inch carbon steel pipeline, 65 kilometers. And in terms of marketing, we'll be landing in East Java and the Gresik industrial zone, which is an area where there are an abundance of buyers. We don't anticipate any issues in the marketing of this gas. We've got petrochemical companies in the region, power generation, gas aggregation. Pertamina and Rosneft are actually building a refinery a couple of clicks away from where the gas will be landing as well. And PNG, the Indonesian gas pipeline company, are also purchasers of gas to sell along their pipeline. We anticipate that we would hopefully sign the gas sales agreement, which may include 2 or 3 potential buyers in the near-term future. Forecast development costs range from $200 to $250 million. The difference between that range is with regards to whether we reduce the CO2 content in the gas or not. As I say, we've got buyers, there was potential buyers who will take the gas as it is, and other buyers who do want to see some of that CO2 content reduced. East Java itself is a very buoyant gas market. We've got growing demand with existing contracting supply declining. We've charted for you here why the existing supply is and the future supply, which is anticipated to come online. And that future supply does include the Lengo gas field. And therefore, as a result, we're still in a supply shortfall. Indonesia is a fragmented market because it's not tied up by one pipeline. So in certain areas, you do see imports. In certain areas, they are exporters. But here, there's certainly an abundance of buyers for the gas that we'll be producing. The asset itself, we think, has low technical risk, but also low investment risk, but with substantial upside. We've made this acquisition at 10 cents per MMBTU. Development costs are anticipated to be in the region of 80 cents to $1, and operating expenses are anticipated at 110, with a buoyant gas market in the region of $5.50 to $8. What we've tried to chart for you here is the value envelope of this project for us moving forward from today. And what you can see is the base case versus the upside case. You've got with or without CO2 removal. And of course, obviously, we've still got a range in the regional gas price. But this chart here, we think, computes somewhere in the region of $50 to $75 million of NPV10 value today as we look forward, which in broad terms could compute to somewhere in the region of 7 to 10, maybe 11 pence per share. Now, as I said, we're not here to be Bulu PSC company. We're here to build a regional portfolio of diversified opportunities built on a hub strategy. Why that opportunity exists is we have seen this region suffer in the downturn of the wider industry, but we are now starting to see the green shoots of recovery, both in terms of industrial capital and investor capital. You had Afira Energy earlier this year acquire the Santos Southeast Asian portfolio. You had Jadestone also this year list in London, previously a Canadian listed company. I think they raised something in the region of $200 million. And you've got the creation of Coro Energy in Malaysia as well. So we are seeing these green shoots of investment capital returning. And so the opportunity for us now is to act while while the opportunities exist for us to buy at these suppressed prices. So we're looking for value accretive deals. They remain to be done. Recapping on the Bulu deal, these metrics will hopefully be able to be echoed in future deals that we're looking at, acquiring at circa 10 cents per MMBTU, and as I say, marketing to a very strong and buoyant gas market. So in summary, what we've achieved here is a very strategic deal with excellent value as a first initial foray into Southeast Asia. The asset style is right in terms of physical scale, the financial exposure and the risk-reward balance. There's some complexity in the deal, but as I said, we don't mind that because we can get around a boardroom and sort those matters out so long as the rocks underneath are sound. And certainly when you're acquiring at 10 cents per MMBTU on a 2C basis, those low-cost entry points don't exist in abundance, so it is a special opportunity for us to seize on. But most importantly, there are more of these similar type deals for us to be doing, and that's where we're focusing our current efforts. So our next news flow wouldn't necessarily be Bulu PSC related. It may be further business development opportunities as we look to expand the portfolio in the region. So we've quite a few slides there that we talked through. I appreciate you probably got some questions. Can I hand it over to you?
Do you have any questions at all?
Thank you, very interesting. Tell me, you are dealing with Java, so therefore you're dealing with Indonesia basically. What about the rest of Southeast Asia?
Yeah,
What
so
about the bigger markets like India and China?
We're very much focused on Southeast Asia. So the countries where we see the significant yet to find resources and where we think we have access through the board and our network are Indonesia, we're a very liquid market. Malaysia would be a real opportunity for us to be able to get into if we had if we could, because there you have we have lots of majors, but you have very few smaller independents like Coro. And you can have a look on the websites for Petronas there, the current bidding round on at the moment. And there's actually exploration blocks available there with discovered resource already on. 10, 20 million barrels, much too smaller for the bigger boys, but very obviously attractive for companies like us. And as I pointed out to you earlier, there's a lot of companies trying to break into there that have money but don't have operating capability. And likewise, there's people with operating capability who are starved for cash. We're fortunate to have the operating capability from Italy, where obviously we've operated for 20 years. We've got 5 producing fields and exploration work, and I think in the last 10 years probably spent the best part of $125 million as a group on operational activity. And we've got the support of our shareholders, who obviously supported us with our admission with an oversubscribed equity placing. And since we've announced this deal, one of our cornerstone investors is Lombard Odier. You may have seen in the news that they've increased their position from, I think, previously 15% to 26% of the company. And CIP Merchant Capital, again, like I mentioned, they sit on the board, own 21%. So we've got good support behind us to go and achieve these goals.
Gentleman at the back.
Andy, with the recent deal that was signed, which was quite significant, a bit disappointing on the SP, but could you put some more meat on that deal? I don't think many people understand the real facts.
Yeah, I guess as an oil and gas E&P company, you've got a couple of choices in terms of where you spend your cash. One, you can go exploration. 2, you can pick up a development transaction like we've done. Or 3, you can go by production. In terms of Southeast Asia, it's a very well-established, mature hydrocarbon basin. So in terms of going for your big exploration opportunities, invariably that's meaning you're pushing you out into further, deeper water and then obviously higher costs. Opportunities like what we just secured now, though, are cosmetically quite similar to doing that, but on a truncated basis, right? We've spent $4 or up to $4 in stock and $8 in cash. I could put it to you in a way that, for example, we could have spent $4 million farming into a PSC in stock and $8 million of cash on the drill bit. We may or may not have discovered 152 BCF. It could have been higher, it could have been much less. But what we've got here is a well-defined resource with what we identify to be low technical risk, but actually quite attractive, handsome upside, both in terms of technical, with up to 420 BCF recoverable, but also commercial upside as well with the gas price and those fundamental drivers we just spoken about. So as a first transaction, it just allows us to have a platform where we can go forward with a development that's comfortable within our scale and capability, that can deliver $30 to $35 million of EBITDA potential, and we would anticipate being online some stage 2021. 2021 we anticipate being on plateau, and that's 70 million scuffs per day production. So as an initial transaction, we're very comfortable that this has low downside risk, but handsome upside risk, and is well capable to be executed within our capabilities.
Any more questions at all?
Thank you very much. I think one of the slides said that the top of the reservoir is at 700 meters
Yes.
and the contact's at 780.
Yes.
How are you planning to drill your 4 wells and complete and stand off to the contact?
Well, I'm not the most technical person of the company to be asking that question to, but in terms of my knowledge, this is a relatively simple development plan. The operator is Chris Energy, Singaporean listed, well versed in these sorts of operations. We have no intention at the moment of going and prodding them and agitating them because they understand this project and have seen it all the way through. The Indonesian government wants to see it online. So from our perspective,
So are these going to be horizontal?
no, these are highly deviated wells. Not from, no, we're comfortable with where we are on the current POD.
Probably have time for one more question.
Thanks. You've based your projections on the price of oil at the moment. What if it falls?
So this is a gas discovery. Gas contracts in Indonesia aren't linked to oil prices. So that is one of the reasons why we can act with confidence here, is because it's not index linked in that regard. It's a contract that's agreed when you sign the gas sales agreement, and you're not at the mercies then of the noise or the volatility of the underlying commodity.
Ladies and gentlemen, Andy Denham,
Thank you.
CFO.